Hey guys, how you doing? This is Franklin. I got chocolate all over me. All right guys, in today's video, we're gonna go over what are some real estate pitfalls that I see all the time. I've been doing this for a long time, and I have seen a lot of pitfalls, and I don't want you to go through the same thing. So here's some things that you can actually, now that you know about it after I go through this, you can be aware of it so you don't have any kind of pitfalls. All right, so let's get started. So let me grab my handy dang it. Here it is. So the first thing in some real estate pitfalls that I see is the number one thing that I see as an issue is falling in love. So look, when you fall in love with that woman or man, I don't understand about the man part, but if you fall in love with a woman, you know you got that one, right? So you're like, oh my goodness, I love her, blah, blah, blah. I'm going to buy her this, I'm going to buy her that. The catch is, that's okay with a woman. It's not that cool with the real estate. And here's why. When you start falling in love, you start spending on things that you really don't need at the property. So what I found all the time, whenever we purchase properties, you have a garage full of things that you haven't touched. And so there's an old rule, if you haven't touched it in a year, get rid of it. So I'm sure if you go around your house, there's probably a lot of things that you could actually make some money off of, or some people at Goodwill will love you for because you haven't touched it in a year because you thought you fell in love with this item and it'll be such a great present for the thing that you fell in love with, which is called your home. Then you start just buying random stuff, right? So 2 things that you got to think about whenever you buy something for your home. Number one, the rule number one is sleep on it. Give it 24 to 48 hours before you pull that trigger at Home Depot. And you still want it after that. And it still has to add some kind of value towards your investment. And if it does, then go ahead, pull the trigger. And the other thing is this. If you have bought more than 10 items in your home that you have bought for your home that you love, but you haven't touched it within a year, and you know you haven't touched it in a year, then stop buying things for your property, right? Because you've got like almost a 90% wrong ratio on that one. So just make sure that you're doing the right thing with it. All right, so the other thing is this. You do not, number 2, I think I wrote this wrong. Sorry about that. That's right. Not keeping track of your expenses. Track of expenses. Why is that a pitfall? Because then, because you're so in love with your property, you're like out of sight, out of mind. So treat your property as an investment. If you've got to keep track of your expenses on your property as well. First, they're a tax write-off. Number 2, they're a tax write-off. 3, they're a tax write-off. So anything that you're spending on your property, that's a tax write-off. You want it to benefit you. Okay, but you could only do that if you're tracking your expenses. It's super easy. You can go to Google, like a Google spreadsheet. It's for free. And just start putting your expenses on what they call a Google sheet if you want. Just make sure that you look at it at least once a month. Keep it around whenever you're having that cash conversation that you probably have with your family, wherever that looks like, that you're just keeping aware of, hey, what did we put inside the property? Let's keep a itemized sheet of what that looks like. Because whenever you sell your property, I think you may be surprised, you're actually not going to probably profit off your property if you put too much into it. You're probably just going to break even on things that you've already spent on the home. So just see exactly what are you spending on your property. All right, so here's the other thing as well. Number 3, when it comes to right here, upkeep equals stress. So why do I say that? When it deals with upkeep, you want to make sure that your property that you're always having some kind of upkeep, that you're keeping it clean, that you're not only keeping it clean, but you're also keeping it organized. Look, it's very simple to not have some kind of upkeep strategy. And then what happens is, let's say a year from now, this is what happens. A year from now happens, you weren't keeping everything organized, and now it's such a huge mess, you just leave it alone. You're like, I'll do it tomorrow. And then 5 years later, it's still like that. Now it's just a big, huge mess. So you want to make sure that you're not getting stressed out because you're not upkeeping it. So make sure that you've got some kind of upkeep pertaining to your property. Less stress in your life. Now, the other thing is this. Keep your paperwork. So you want to make sure that you're keeping your paperwork on everything, because it's only going to help on keeping track of your expenses. Also, a lot of times you're going to have warranties on certain things, or things that's going to actually benefit whenever you sell your property. So this is to get away from the pitfall. This only adds value if you keep your paperwork on a warranty on a refrigerator, a stove, a pool pump, anything else that looks like something that's going to actually say, hey, I got this stack of paperwork, almost like right now, I'm sure that you have in a binder your original birth certificate and your social security card, right? Or your passport. So those are three things that you're like, hey, this is kind of secret. I got it over here on the safe, blah, blah, blah. Do the same thing with your home. Just get a simple folder, put these items inside your folder, and just make sure you're adding to it. So whenever you do sell the property, take out the folder. Here you go. Here's all the receipts that I kept. Perfect. Awesome. So keep all your paperwork. That only helps. Now, the other thing is this. Number 5. April is what? It's tax time, right? So remember, when you own a property, the end of the day, it's not like the tax man is going to keep account of everything that you're doing inside that property. So this actually does a circle, keeping track of your expenses, keeping your paperwork, because it's going to benefit you whenever you file your taxes. Here's the other thing that a lot of people don't know about. Tax season is not April to April. A lot of people believe that. That's actually incorrect. If you're a business owner, you understand what I'm getting at. It goes from December to December. And what I mean by that is technically it's January 1st is tax season to the 31st of December. Meaning, let's say in December 31st, you know you're actually going to get a tax bill. The reason why the government kind of says it's April 15th is because you're kind of screwed if you're already doing it in January, February, or April. Here's why I say that. You could only correct and you could ask any CPA, even though I'm not a licensed CPA, I know this because I've paid a lot of money in taxes. Why I say January 1st to December 31st is that if you are already looking at fourth quarter of the year and you are possibly going to owe money on taxes, if you're a business owner, you've got to spend what you owe to improve your business. You can legally do this. You can ask your CPA before December 31st. You can make any kind of adjustments that you're going to make for that following year that you're about to pay taxes on. You've got to figure out that plan before December 31st, period. You cannot figure it after, meaning anything dealing with this property that you want to claim, that you improve your property, because that's a tax write-off. All these other little things are tax write-offs. Eating at a restaurant is not a tax write-off, so that doesn't benefit you. That's why I told you treat your property as an investment. And that is actually our bonus. Bonus item is this. Make sure that you're looking at your property as an investment. Your property is an investment. It is not, I got a little cheat sheet here. It is not something that you're just going to keep on winging this. So treat it as an investment, because if you ever want to get started into real estate and buy rental properties and all these other things that I've done before, is that you have to actually treat your baseline property that you have as an investment property. Because then once you have that investment property, it's going to be easier for you to transition and understand, hey, here's our expense report. Here's everything that goes in that property. Oh yeah, Franklin was telling us we only have December 31st to make actual purchases and any kind of tax readjustments that we want to make. It needs to happen before December 31st. Any great tax person is going to tell you that. If they don't tell you that, that means they do not know what they're doing, because you cannot make any adjustments. You can make small ones, but you can't make major purchases or adjustments that you think is going to help you for that tax season past December 31st. That's the biggest thing. Now, again, I'm not a tax consultant. Probably somebody who is going to say, well, you can make this exception if you do blah, 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 blah. I got it. But baseline is this. You got January 1st to December 31st to do everything that you need to do in that tax season. If you're trying to file and figure out what your taxes are going to be between January 1st and April 15th, you already lost. So just FYI, you want to do it way beforehand, because if you do it in that window, and then they can't make any readjustments. Meaning, if you figure out, if you own a business, man, I'm going to have to pay $100,000. Well, if you have to pay $100,000, which I've had that happen, if you did it before that time frame, now you have time to say, okay, wait up. First of all, is that correct? Second of all, where can I make purchases to improve my business for the next 2 or 3 or 4 years that I could pre-buy right now? If it's buying a new truck for your business, upgrading your computer software, which is 100% tax write-off, upgrading equipment if you're doing events, upgrading certain things, because now you're taking that tax that you were going to pay and improving your business with it. And the only reason why I say that, and people are like, well, don't you want to pay the government? Tell me one thing the government's done right. Period. Exactly. So that's exactly why I want to improve my business, and later on I could help more people. So hopefully you guys get some out of this. Perfect. If you are, make sure you smash that like button. See if I'm missing any kind of these steps either. I would love to know if you guys would want to add something. Pretty sure there's a ton more we can do. So anyway, guys, my name is Franklin Cruz. I'll talk to you guys later. I'm out.